Well, welcome to MT Live. Welcome back, all of you that join us every other week here at MT Live to review what's happening in the broader markets, looking at our market internals. We're going to look at sectors, rotation, have the semiconductors topped out, possibly in the short term anyway, with that big gap and crap this morning. So let's go through some slides for those that are just beginning to join us. If you have questions, put them out there. Everybody's here to learn, review, and yeah, so let's do it. So a little bit about what we're doing here each week, why we do it, how we do it. This is an objective market interpretation based on price structure into market analysis, not headlines. Well, we do pay attention to headlines. What's moving the market, of course. There's been too many headlines lately. We're all a little bit sick of them, with this war and inflation. It is what it is. We can't change it. Been through it before with different situations. I don't think it's ever been as much as it has been lately, day to day. Been a little quiet today, though, huh? We'll see. So we always have to understand what's happening in the broader markets because most stocks are going to be moved around by the broader markets, and we want to watch where money is flowing into and out of. It means that there's liquidity there. If you do options, that means that probability is that you'll be able to use options to do that. This current market environment has been one in which I guess there's just so much uncertainty that the spreads on most options, bid and ask spreads, have been pretty darn wide, surprisingly wide. But that's another measure, a way of looking at uncertainty. So we want to look at what's happening in that broader market. And I like to call it what I have been for many years, a techno-fundamental approach. Why? Because while we focus on the technicals, and initially that's what we all do as we start to learn how to read charts, is that we look at support and resistance and trends, and then we tend to go on the deep end or way off the path, and we get into the indicator-based methodology. But as you review more about price structure and what moves markets, well, what moves individual stocks a lot of times is what's happening in the broader markets. Right now, it's semiconductors. At some point in the future, that won't matter as much. They'll probably be under selling pressure, and we may see money rotating into healthcare, which appears to be starting to what's happening right now. Not to a great extent. They're starting to bottom. Certainly, software has been bottoming, and money's rotating there. But and then not in any meaningful way has money begun to really rotate out of semiconductors. Maybe today is a start. We'll take a look at that. And so we use our market internals to measure what's happening in the broader markets. And while we can look at a market internal gauge, like what we call breadth, which you can look at in many different ways, that just gives us a very broad view of, a whole lot of sectors. And that makes it easy to just see, from a broad strokes point of view, what's happening under the hood, as I like to say. But as we go and look at individual charts, we see what that breadth gauge is communicating to us. Right now, while it's improving, it's pretty anemic in that, basically semiconductors, some old stocks from the dot-coms, was it Cisco came up roaring and Intel came back from the dead. So some changes there. And so as we look at all of that, we look at the internals, the intermarket analysis, like now interest rates and oil are totally in focus and what's moving the market. And that'll eventually go away. And I say that because that's been my experience over the many years, is that there's such an intense focus at one time, like it is right now, on interest rates and inflation. And eventually I've seen it before, and then nobody cares anymore. Environments change. So we have to go with the flow. And as we do that, we stay in touch with what is. And so then we can trade whatever choices we decide, stocks, options, ETFs, whatever it is. And looking at news, I'm sick of the news. I think most of us are. And what does the charts tell us about that? And we put that all together All right, we put the odds in our favor. So we always look at this slide, and we look at this slide because this is the basis for how we make our decisions. Everything's about price, everything. Other people look at that and cut it up into different ways, looking at different analysis tools to do that. But this is where it all starts. Support, resistance, and trends. We look at it in a candlestick format. Why? Because it makes nice pictures that we can interpret a little quicker than just looking at an individual bar. And then bar by bar analysis. As we look at that on an ongoing basis, it communicates to me, oh, that's a topping tail, that's a bottoming tail bar, that's a wide range bar, and we scan for those bars. Then we look at trends, what we call pivots. We'll look at that on some of our charts, support, resistance, how does a trend develop, multiple time frames, which we'll take a look at, and then measuring relative strength and weakness. Nothing's stronger than semiconductors right now. And they're beginning to, even today, as I'm looking over to my right there and seeing them making turns, they're trying to bottom out, trying to turn back up again after the gap down and the move lower. They're trying to stabilize here to move up. We'll see if they do. And we look at volume. Secondary. Why is it secondary? I'll tell you why it's secondary. Because there's a lot of attention paid to volume. And over my experience, where I was going through learning and searching for the truth in the markets, I saw or read at the time, oh, the markets, they're in a secular bear market. They're going up on light volume. Meanwhile, they're going up 20% from where they were. Who cares? So it's secondary. Somewhat useful information, but secondary. And we spoke about internals, money management. Say it every time. I think this is truly the key to your trading psychology and lasting in the markets. And I always say, few people take this course, but a candlestick course, oh yeah, give me that. If I put it with a money management course, maybe, but this is the most important one, and everyone should take that course. As it says, one concept is not a strategy, and we'll talk about how we put these together. But this is about what reinforcing what I just said, techno-fundamentals. And what is that? Price patterns, looking at trends, support and resistance, and we identify where buyers and sellers are going to be. That's what support and resistance is. Support is where buyers were before, and we assume they're going to show up there again, and vice versa for resistance. It's that simple. And we put that in the context of a trend, the intermarket analysis. Well, how are these stocks reacting to what bonds are doing? Right now, it's pretty close. As interest rates move up, that's competition for equities. But how high is too high? It changes over time. We go back and look at, 1980 or so, when it's like short-term interest rates were at 20%. They're nowhere near 20% now. So why is it bad now that they're going up from where they were to 4% or 4.5%? Because it's all relative to what's recent in the past and what we've gotten used to and what the markets have adapted to. So we need to be able to interpret that and use these intermarket analysis ways to gauge what's happening with those order flows in the market. And then market internals, as we measure how much breadth there is, how much broad market participation, and if there isn't, where's the money going into or out of? And that's how brings us to looking at individual charts, which we have to do on day to day, week to week. As we put that all together, we get, as it says, complete information. Now, when we look at charts, and when I look at charts, this has been my experience trying to figure out, what does that chart mean? Well, yeah, I see it's a bar with a tail on it. Well, what happened within that bar with a tail? It's just a matter of calling it a bottoming tail bar? Well, no, we look at it from the point of view of putting it in the context of what did other traders believe? What did they experience? where did that bar form? Did somebody get caught on the wrong side of a move, which could then reverse prices moving in another direction? Or is it confirmation of what's happening, where it tells us that something is in an uptrend, and even though it dipped down, could be a relatively large amount, buyer stepped in again, and that reinforces the trend in what's happening. So because this is a business where we can never know with 100% certainty about what's going to happen, utilizing individual bars and putting them in the context of a trend and from the point of view of what does it communicate to me about what institutions are doing and other traders. Are they aggressively buying dips? Because if it was a wide range bar on the downside, there was this sell off. And then all of a sudden, demand came in and pushed it back up. So, as the slide says, it's about candle language and putting that individual bar in the context of what preceded it and the trend and support and resistance, relative strength and weakness, and then finding out where there are the best opportunities. In our opinion, this is not where the best opportunity is. This is, as it says, a chart artist, some intelligent, I guess, must be intelligent person was able to figure out how to program this. But how do you make sense out of this mess? Do you really can you believe this thing? Just because there's a green cloud, that's a cloud, that's where you're going to buy? Or if the cloud is up above, why is it green up here and red over here? There's probably some trend following thing, but look, the cloud is way up here and the prices are way down here. And because this all leads to a lot of questions. Am I supposed to follow the cloud or the prices? Who's leading here? And what are these squiggly lines? And what is this one way down here? Now, there are others that'll sell you a whole course on how to read this thing. Or you could take a master trader course and learn how to read the underlying and putting it together in multiple time frames and just read what matters, what moves this thing versus looking at this and try to interpret or waiting. Oh, now it's touching the cloud over here. Well, what about this bar right here? Right? This was trending down and then it poked up and it came right back down again. So that tells me that sellers took control. This bar here, these green bars being ignored. See that one there? It's pretty wide compared to those. And then when it got knocked right back down again. That's what we call a bearish 180. And then removing the cloud, just noticing, recognizing that this went sideways for a period of time, and then it broke down, and there's this void below. I don't know, does a cloud tell you where there's a void? And so as prices went sideways all that time, this correction through time that was preceded by a move up, and then it broke down, back to this, pictures of what others believe and what their expectations are created with money, takes us back to this. Well, this was whippy and sideways, and notice how it got tighter up here. And look at the little, right? That could be like a little flag pattern. In any event, it eventually failed. So this accumulation or distribution was back and forth, broke down, and that leads us to believe that prices will go lower. So the question is, do you want to build your financial future, your beliefs about how prices are going to move based on what an indicator salesman is telling you, how to read the cloud, or how to read what everybody in the markets are doing? Because this is communicating to us what everyone is doing and what everyone is experiencing, not just the ones that are looking at some cloud. All right, candlesticks. candlesticks. Semiconductors improving a little bit here. So when we look at patterns and candlesticks, right, we have this concept called bar by bar analysis. What is that? That means that every single bar has some kind of meaning, but in it by itself, it's not very helpful or useful by itself. So as we begin to put these candles together into little groups, they form patterns. Now, what I'm displaying here is taking those, and from the view of being long, it happens in different ways. So the bars can happen in many, many different ways, the format. But if you put these together, this is your simple pullback pattern. Yesterday in coaching, those of you there, we had conversations about fluid price movements and congestions, and you'd recognize this as a fluid price movement as prices went down. And this is what we call a bottoming tail bar. In other words, it went down and it came back up again. That tells me that buyers took control. And if this is in an uptrend, that means they should continue to buy and push it up. Right? This one here, well, it went down, and for some reason it came back down again and retested. So as we look at individual candles, and you can look at the way I put this one together, you recognize that it gapped below the red bars, and then it retraced back up again. Putting together bar by bar analysis like this and reading them together, you begin to build, well, this begins to build a picture. This begins to build a bias. And so you've already got, if this is in an uptrend, if you've defined it as an uptrend, higher highs and higher lows, and that creates a bias that it's going to go higher. From there, well, the question is, how do I get on board to take advantage of that bias that it's going to go up? Now, you can go look at the Ichikumi cloud, or you could say, hey, if I look at these individual bars in the context of the big picture being that it's going to go up, I need individual candles that communicate to me that buyers are taking control at this moment in time. That increases the probability that the trend will continue. That's what we're after. So this pattern here historically is very reliable because it's in an uptrend, and we have two instances where we see buyers took control. Bottoming tail one, it went down, came back up again. And then this one, it tried to go up. Why didn't it keep going up? I couldn't say, right? Every day could be a bit different. Some bars are going to be noise, meaning we don't have to understand why they did it other than to say, you know what, they're really not meaningful within the big picture. But now when this bar formed in combination with that bar in an uptrend, and we talk about retracements, in this case, I'm just going to talk about retracement from one bar to another, the depth of retracement. Can you see how this combination of bars is a greater, larger picture that communicates it's going to go up? Now, down at the bottom here, right, down at the bottom, it was going down. Right, this is the same as this, right? You can see I just dragged this and I put it down here, but this part changed. And this is a larger bottom. These often happen in the stocks that are bottoming out. Sometimes the market goes through a correction, right? We know it does. And that creates more uncertainty. So this is a picture of what's created more uncertainty. And as we put together the individual bars, we see, in this case, a larger bottom. And it's broke down. It's a big green candle. It came back up again. And now notice how these are smaller in ranges. So we see large ranges. That says that there's more emotion. There could be more certainty in that if something's moving down fast and the bars are big, that means more and more individual traders are in alignment thinking it's going to go lower. As the ranges contract, that tells us that those forces of supply and demand begin to come together. And as patterns tighten up, it increases the probability that prices are going to move in the direction of a trend. Or if it's extended to the downside and it forms a bigger bottom, I have more information that tells me what others are going to do. So our goal, looking at candlesticks, is to put together, well, to read enough candles coming together that it communicates enough information to us to make a decision. Now, the stronger the trends, the more there is multiple time frame alignment, the more a sector is in favor and it's moving with the markets. There's more and more pieces coming together that increases the probability that we're going to have a profitable trade. And of course, we got to figure out where's it going to go to, where's resistance, is it making new all-time highs? And then, of course, how to monitor it, how many shares to buy, right? Money management, and so on. So you can go to the site, or you can just scan this and read about why Master Trader. I think Dan probably already put a link in there, but we put this in here. A lot of times individuals are watching this from their phone. So there's a way of just scanning that and you can get to the site. You need a trading plan. We need a plan that guides us as to what to think during the trading day, right? Well, what to trade, what to think at the end of the trading day, right? How to build an interest list, and then how to think during the trading day, right? Money management. Should I add to a position? Should I reduce the size of a position? I don't think that position is failed. It hasn't failed, but you know what? I'm just not so sure. But I don't want to exit, so maybe I'll cut a third loose, right, or whatever. You get to make your own rules, your plan. Right? But you have to have that plan as to how you're going to approach a trade, the share sizing, how you're going to manage it. Without that, you're like a ship without a rudder. You're making decisions in the moment. It's like, should I go into the iceberg? Right? If you're in a sub, should I dive? What should I do? So you need some rules as markets change. And so market internals, as you're an intraday trader, market internals are very helpful. What kind of day am I dealing with here? So we could look at things like the advancers minus decliners, not a line, just the raw data, an NYSE tick, the volatility index right now, market into market analysis. Is oil spiking up or is it spiking down? There's so much focus on that and interest rates. So this is our key, right? To putting this all together. And how do you do that? Well, honestly, it starts with education, because how are you going to do that on your own? Ask ChatGPT to make you a trading plan based on what? It's your Kumi Cloud, stochastics, MACDs, whatever. Where are you going to start? And if you tell me on the price action, well, you've got to put together a structure on how to read that. And ultimately, no matter how you get there, patience and discipline to follow the plan. How do you do that? Well, you have to believe in the plan, and you have to accept that plans, as great as they could be, market environments change, and you have to have your way of changing with it. So this is something that Ken and I put together. A lot of people have joined. It's a Telegram channel. We post stuff on there, videos, watch lists. Look at this, look at that. And here's an upcoming webinar that's coming up, like an MT Live, or I'm doing one tomorrow at 2:15. If you're around, they will send recordings. But you can go in there and get familiar with some of the things that we do. We don't update trades there, but we give trades, and you're welcome to email us with questions. So let's take a look at where things were and where they are right now. And this slide, this chart that you're looking at, is what it was 2 weeks ago that we reviewed in MT Live. And this is where the markets were, and this is where the different sectors were as far as trends. This is updated in the ETF letter each weekend. And we monitor this to see how many trends are in alignment with each other, right? And multiple time frames. So we can see S&Ps, NASDAQ 100, the Russell, the transports, all in uptrends together. That was 2 weeks ago. Aerospace and defense was in a downtrend. And the second column here, this is what, so when I do this, subscribers read this, and they know this is what it was the previous week, and this is this weekend going into Monday. Was there a change? Was it the same? Did anything change in these time frames? And over here, you can see home builders. That was 2 weeks ago. They changed from up to sideways. Now, with the weekly being down and this being up and that changing to sideways, probably that was some kind of whipsaw. Wasn't a good thing. Right? Once it goes up, you want to see it stay up. And as it progresses, what we want to see reading this trend matrix is that in this case, the weekly eventually goes from down to sideways. So just at a glance, I can say that this is beginning to improve. Your healthcare equipment, similarly, down, right? Changed to sideways. This was 2 weeks ago. Medical devices, you don't want to go there. That's in a downtrend in all time frames. But look at software. This was down. If you go further back, this was down. And now it went from sideways to up. In the weekly, these are still sideways. So it's improving. You see the green on the symbol there. So there's the name of the sector, and that's the symbol. It's improving. Over here, we saw healthcare was get more cautious. And financials went from up to sideways. So there was improvement, and it lost it, and so on. We see what's strong and what's weak. Gold was up in all time frames at one point. So again, at a glance, we could see where money's flowing into, out of, and how that's changing. And then we look at a chart of the S&P 500. This is breadth. And when we look at this, what does that tell us? Well, this was back in the beginning of April. And pretty much everything was firing on all cylinders at that time. I mean, it was just, up and away. No pullbacks, no pivots, but the breadth moved up. So a lot of things moved up together. And then it just topped off. Here, breadth and sentiment reached an extreme together. And that went sideways. There was a correction through time. And then a lot of individual sectors began to deteriorate. And, again, this was 2 weeks ago. It was getting worse. Yet the S&P was going up. Qs were going up. The weekly was in an uptrend, but it stalled. So let's see where it was yesterday, as of last night. We view this. This is what it was over the weekend. And we see communication services got a little worse. It's neutral. Right? Sideways, up. And so you see home builders continue to deteriorate. Home construction, it's in a downtrend. So you might think, oh, they're cheap. They're extended. Well, they're not directional trades. Maybe if you get a bullish wide range bar, you can get a credit spread trade out of it. And so credit spreads are a one way of participating in something that's in a downtrend if you get a potent reversal. Right? Medical devices improved. That's interesting, but it's not directional. Healthcare sideways. Healthcare over here. It improved last week. Back to sideways. That means that if we look at the chart, it's whipping up and down. Right? That's what I can tell by looking at this from the previous week to this week. It's whipping up and down. Of course, semiconductors are going up. Software is up 2 weeks in a row on the weekly time frame. So we want to look at that in there. Telecom is strong, and so on. We continue to look at this. Materials broke down. What does that mean? What we could look at For the swing trading letter, look inside the material sector and see, are there now sell setups that we can participate in? So this gives us a broad view as to where money is flowing into or out of. So let's look at our internals now. This was as of last night. Things opened up today about where they were in the S&Ps, and the Qs gapped higher with the semiconductors, and then they came in pretty hard. So sentiment has deteriorated. That could be a good thing. Right? Breadth is improving, but now we could say, well, option traders are starting to become more bearish. Okay, that's understandable as the markets are going up and then they gap up. They're hedging, possibly. They're buying more puts than calls. That's what this tells us. It's not in an extreme yet, but they may be thinking ahead of what's coming. We just don't know yet. This is neutral. This is neutral, but I do see breadth improved, but it's not great yet. And how do you read this? This is nothing more than a fancy MACD indicator, difference between two moving averages. That's what this line is, the 12 and the 26 exponential. What this tells us is that the 12 got above the 26. That's why it's above zero. And as it goes higher, it means that the moving average is growing further and further apart, meaning there's more stocks, there's more sectors that are beginning to improve. And again, here they're buying more puts, and they're either hedging, like getting ahead of it, or this is just going to continue to correct through time. So I'm not sure exactly what this means yet, other than eventually price has to tell me what it means. But as this corrects through time, let's say this continues to go sideways and the sentiment gauge continues to deteriorate, that starts to come in alignment with this uptrend that, hey, it's up a lot, but you know what? All of that put buying could support this going higher. So we need these gauges to guide us rather than us thinking, oh, that's too extended. It can't go higher. So you could read about getting on board with a weekly options trader or the advisory swing and options trader or the ETF. Right now, all of these, if you use the Memorial code, Memorial 26, you can get 40% off. So a lot of people are taking advantage of the already discounted annual. There's no annual for this, but anyone that's interested in annual, we have a link that you can utilize that, but it's not on the website yet. But you can go and check out the different letters, see what you're interested in, and get on board. They're very small amount of money from what it usually costs. Usually it's relatively small anyway, but yes, John, it's 40% off. Those coupon codes are, so you can go and get an annual to the advisory swing and options trader, which is already discounted, or the green room. And yeah, so that'll be over next week or whatever. The 31st is Sunday. That all of those will expire. Well, it's Memorial Day. Take advantage of it or not. All right, so let's take a look at what's actually happening on the charts of the broader markets. I'm going to bring these over here. And so this is a page that makes it easy for me to go and see what's happening in the broader markets at a glance. And we're gonna look at a few of them. Let's go here. Let's get this one here. Let's start over here. All right. S&P 500. Uptrend, black and white, undeniably going sideways for 2 days. And in the pre-market review yesterday, we talked about, you know what? It's in an uptrend, but is momentum stalling? Well, I can see momentum stalling. I don't need indicator to do that because the ranges are getting small. We're waiting for news, next shoe to drop with the Middle East, who knows what. New Fed guy coming in, what is he going to say? Does he have some trick up his sleeve? We'll find out soon enough. But momentum is stalling. It's still in an uptrend. We measure that by the distance between highs. That's how we read price action. That doesn't mean it's going down. It just means momentum stalled. Major support is down here. That swing low. So now as we go across these and look at where's money flowing into or out of, well, industrials are starting to form a trading range. It broke out. It looked great. Oh, it's going to go up. Here's a little pullback buy setup. There's a bottoming tail bar. Greg talked about bar by bar analysis. If it can take out those bars highs, it's going to go up. It's like, what the hell happened? Well, maybe some news, but bar by bar analysis tells us, hey, am I glad I adhered to the method and didn't buy until it took out that resistance area, even though the pattern was supporting that was going to happen. So now it's violated the swing low. It's going to go back down. So I wait for some kind of setup. It's not down in multiple time frames. The moving averages are intertwined. And now it's going back up again. Is this lunacy? Schizophrenia? Uncertainty? Yes. That's individuals, institutions managing billions of dollars saying, I think it's going to go up. I'm not so sure. I better get out. Maybe I better get back in again. I say, can you make up your freaking mind? Well, eventually they will, and everybody will. But right now, I can objectively look at this and say, this is indecision in this particular sector. And from there, I can start looking at individual stocks within that sector. Doing that, I can press, I think it's this one here, right? And I could click that and start looking at individual stocks within the sector. And I could say, well, which ones are strong? Airlines have been strong, very strong. And that communicates what? There must be a pretty strong belief that this Middle East thing is going to get cleared up. Price oil dropped a lot, but that really doesn't communicate to me really the extent of what some of these have gone up. Anyway, they've gone up a lot. Look, UAL, Delta, LUV, all airlines at the top of the list were weekly percentage gainers. You've got money going into trucking, trucker, whatever, rentals, FedEx. So there's a lot of improvement here within this sector, even though, right, this is indecisive. If we go down to the bottom, we can start looking at what's not doing well. And of course, I could bring up a chart and start looking at these individual stocks, paychecks, which maybe that's bottoming out. I mean, just quickly, I don't want to chart. And here, that's blue. Forget about that. These are green. Here's paychecks. It's at the bottom of the list here, and we see it's making a bottom. So this sector has been a victim of AI. If you to look at this particular sector, it was destroyed as people losing their jobs and staffing. It was going down and down, and we could chart this, of course, plot this. You could see, I don't even know what this is here. Oh, this is industrials, but here's staffing going down. Looks just like paychecks. So you could look at that. You look at ADP, another staffing, bottoming out. This is rotation. Money is rotating into these. Why? Because somebody thinks they're cheap. Maybe they are cheap. They've gone down a lot. I mean, percentage-wise, I mean, this correction has been 42% from that high down to the low. So getting cut in half, thereabouts. Okay, that's cheap. And I guess we start looking at different stocks. What's strong? Up at the top of the list, and it just rockets higher. So you got the idea. Right? And as we look at our sectors, we know technology is going up. This is going sideways. Question is, can it break out? putting zero DTE spreads on this Telegram. If you're in the room, Steve, we'll give you guidance on that. So look, opposing pivot highs and pivot lows. It's been holding here. Support, resistance, sudden alert. See if it's going to break out. This could be one of those sectors that plays catch up. So, and where the S&P might move sideways and correct through time, this starts doing some of the heavy lifting. And we could do the same thing. Look at stocks within there. What's doing the best? Like news, Fox. Easy enough to find out where money's going into. Start with the chart and then start looking at different sectors. Right, banking has not been doing well. These are regional banks. They're on a sideways trend. Look at financials, not doing well, down again. And look at materials, breakdown, back up again. Consumer discretionary. And here is Tesla. It's at the top of the range. And big improvement. Staples, this has been in the ETF letter for a while. Defensive, just been a grinder. And healthcare, and we saw in that matrix the improvement. Now, this was a green bar at the beginning of the day, earlier in the day. It's still the beginning of the day, but now it got sold off. So we need to wait to the end of the time period for this to be done. But you can see how it's improving. Rounding type of a bottom. So money is rotating into this, and we do the same process. Click on that, see what's doing well. Right, Biogen, there are some biotechs that are in here. Pfizer's been doing bad for the longest time, but you see it's a process. Where is money going into? Where might it be rotating out of? Out of? Where's it rotating into? And these are the S&P sectors, right? S&P sectors. And then we go to other sectors besides just the S&P sectors. So they're the broadest. The S&P sectors are the broadest sectors. And then we can start looking at sectors within those sectors. We start breaking that down. It's called the top-down approach. So there's semiconductors. Here's internet. And that's started its grind up. I don't know why I have UAL in there. Probably should have jets. Right? But you can see airlines, aerospace and defense. Right? That had broken down recently and it's back. Home builders coming up. So this tells us that there is somewhat of a belief that these interest rates are going to stabilize or come down. Right? This talk of the Middle East, ending, maybe it is very volatile situation, as you know, but this is up into an area where sellers are going to step up. And think about this: if you were in this and you bought it here and it went down there, that's what it tells us, what others are going to do. It rallies up into here. There's going to be sellers there. Home construction. There's SMHs, right? Are they rolling over? Well, one red bar doesn't change the trend, but maybe that's the start of it. We'll see if it's going to pull back further. And so this is the whole process. Right? Small caps. Momentum is stalled today. Now, this is another one in the ETF letter. And the whole idea behind this, as well as, I'll switch this from KRE to DIA. The idea here, when we got these in the ETF letter, was that these were going to catch up and make new highs. And this has made new highs. It's consolidating. This now has made new all-time highs, and it looks great. So just we're managing. There's another biotech. I have another one to look at. Right, we're looking for rotation. And think about as we look at all these charts, what do you mostly see here as opposed to thinking about the semiconductors? Just thinking that that's a good place to start learning options. Well, covered calls are pretty simple strategies, but you have to learn how to read the charts. Now, covered calls are related to if you own that particular instrument. So if you don't want to sell it and you sell a covered call and you don't want the stock to be taken away, you need to be able to recognize when it's extended, and then you have to learn options, meaning which ones do you want to sell? Which strikes? Time to expiration. How are you going to manage that? So it's slower. It's a more conservative way, BC. So sure. Now, look, broker dealers. I look at that, I think to myself, it broke out and failed. It broke down and failed. It's retraced up here. It's going sideways. What the hell is this? Right? Is it a topping pattern? Is it an accumulation pattern? It's a pattern that says stay away. For now, it's improving. Aerospace and defense. When I said, what do you see here? Right? These are weekly charts as opposed to thinking about semiconductors or even this. What I see is the majority of the sectors aren't going up. So when we looked at that breadth gauge previously, and we say, you know what, that was deteriorating, right? S&P 500 is going up, and this and the gauge is not. What's going on? Well, sideways, trading range, trading range. Bitcoin and gold doing nothing. This is asset management. This is maybe starting to bottom out. It's a little early to tell. Retailing, trading range, right? Medical devices, downtrend. Healthcare, that one's trying to bottom out. And biotech's trading range. But let's look at them on a daily time frame. Bitcoin breaking lower. Broker dealers trading range. So many things are just going nowhere. But like we looked at the Dow and looked at the transports, is there a probability of beginning to participate? So when I look at medical devices, I say, well, that's not the place. What about retailing? Maybe, but it's not ready yet. And it had a good retracement, but it's not ready. Healthcare, maybe. Set an alert above these highs. Biotech, just too wild and whippy. Asset management, maybe. You can see the moving averages are tightening up. Just not ready yet. Set an alert up here, down here. Not sure what it's going to do. Right? Healthcare providers is pulling back to a rising 20. Maybe it's ready to make a turn. You can go and look at different stocks in here. See what's doing great on the day. Right? There's a biotech, him and hers. I know that's gotten beat up, and so on. You can see that's the process. Now, anybody have questions, if something you want to look at, you're welcome to ask. But now Magnificent Seven. Right? They have been lagging. Mags. There's an ETF for Magnificent Seven. Look. So today pre-market, I had put in the intro slide. Is there a blow off coming? I said, watch the Magnificent Seven. Well, maybe these will begin to participate. I really don't see much evidence of that yet, but there's some. Look at Amazon. Today looks pretty good. Apple has been doing the best and moving up. This has been pulling back to an area where buyers should step up here pretty soon. It's an uptrend. This is part of what we talked about yesterday in coaching session about assessing the big picture and then waiting. And we talked about a little bit today, waiting for the setup. So look at this. What's to the left here? Nothing. We got this minor support point, but this is where, just eyeballing this from here to here, this is where they should begin to materialize. You want to watch this over the next day or two to see if it actually can make a turn. Here's Google. Not a great setup, but here it looked like it was going to fall off the cliff, and now it's recovering. Amazon, we took that. Tesla has been improving. This has got to look a lot better on the weekly charts with this retracement. Netflix, I don't know. I mean, it's in a downtrend, but it's just been holding here for a while. Right? It's been holding. Set an alert below those lows. Set an alert up here. Not interested in any longs. Right? But we'll see if it breaks down. And Meta, another trading range, going nowhere. And this software sector, chopping sideways. This hasn't been able to participate at all. Now, if we look at IGV, we haven't looked at all sectors, but this is where money is rotating into. And same process. Look, moving average alignment is improved a lot because of the bottoming action. It's still kind of messy, but it's a grinder. This is another one in the ETF letter that we bought when it was lower. And it's just slowly grinding. It's improving. And as individual stocks within here start to improve, which we can take a look at. And if I change this to blue, right, we can look in here and see what might be doing well. And we can scan for, right, if there are any bullish wide range bars today. And lo and behold, there are. Well, that's been doing well, but how do you get on board that? Got to wait for setup. Team. Well, that one's not ready for prime time, but what's good on here, folks? What do you think's good on here? You might say, I don't see anything good on there, Greg. That thing's been dead money for a long time. What I see good on here is that it hasn't filled the gap. So we have different concepts of interpreting price action. Right? Pivots. These green dots are pivots. Some platforms call them fractals. It's a fancy name. So it's forming support, and two pivots. It's forming new resistance. Remember, this did not exist a month ago, obviously. So it created resistance. It's creating support. And look at how the moving averages are coming together. So as I said, we look at moving averages as a visual aid. The moving averages come together. A longer term moving average, this is a 100, right? That's equal to the 20 on the weekly. It's pointing down. And so here's the 50 and here's the 20. These are coming together. So it means that there's more price action occurring in this area, which is bringing those moving averages together. And the way we interpret that is we say, hey, it's getting tighter. I can see it's getting tighter. Is it going to break to the upside or is it going to whip to the downside? We don't know yet. But if it whips to the downside and this is bottoming, it should come right back up again. Right? That analogy of trying to push a balloon under the water and it pops back up. That's the kind of pattern that it should form. Meaning what it should do if it did that, let's say it gapped down tomorrow for whatever reason, it should be green, right? It should be a green bar. It should be one of these. If it gaps down and it comes back up again. This is how you utilize bar by bar analysis. And as this comes together, right, it increases the probability, not there yet, that it's going to do this. So it's developing right now. But this is creating a point, an inflection point. Call it some kind of triangle. You can draw some lines on there if you like, right? But that's the point. So as we look at different sectors, there's one that's just getting started. Look at something got that moving today. When's the earnings? In August. So there's one, definitely a put spread candidate, definitely one to look for buys on pullbacks as we look within that sector. And so that's a good one. I'm just going to put that in, just going to flag it. Let's find another one. That one's terrible. That gap down on earnings could be an exhaustion gap, but there's no interest in this. Another one, nothing. So there's a lot of stuff that's all over the place, whipping up and down. What's the strongest in there? Yeah. So that moved up on earnings and it just flies. This old dog, BlackBerry, CrowdStrike, right? Just incredible move. So I know this was talked about this morning in the green room about doing a call spread. It's not giving it up in a big way, but look at the 65-minute chart. Look at that uptrend on the 65-minute. Now it's violated the uptrend. We know that for sure. Call spread would make sense. Doesn't make sense to short it. Not yet. But no doubt. Was that extended? Yes. It gapped down. Buyers are not throwing in the towel even now. Yeah, so Dan's saying the calls are illiquid. All right. And so that, again, you can see the process that we go through. Here's one, Dan. That's a little, it's under the open. Maybe there's a call spread there. So this is the process that we go through. When we see a pattern like that and we say, okay, I don't think that could go back up there by the end of the week. And you open up an options chain and you look at it, and is there options, weeklies? And there is, and you put more strikes, and you see that the spreads are what they are, but you just look to see up above $135, and look at the spread, it's just ridiculously wide. It's like they just don't want to do business. So that's the process we go through. And so there are plenty of strong things within here and things, stocks like this one that are bottoming out. So different trends, like pullback opportunities, basing opportunities, credit spread opportunities is what we do day to day to determine where the money's flowing into, out of, and then start drilling down to different instruments to find out, right, where there are opportunities. So here's SMHs, and it loaded up all of the semiconductors in here within there. So here we have the beginnings of what might be a pullback and the same process. Is it a call spread candidate? Oh, it hasn't broken a prior day's low. So you can see how it just becomes a fluid thought process of looking at the charts and sectors and money flow. And we could look at what's the weakest in there right? And is that a catch-up trade or is it going to break lower? Like, we'd have to see which way it goes. Then big wide range bars. And so again, trend, support, resistance, bar by bar analysis. Here's a trading range. And what is this? Broadcom. This was a green bar before the day ended yesterday. So this continues to be in a trading range and in the middle. And which way is it going to break? So this is one you definitely want to put an alert under the lows and an alert up at the highs and see which way it goes. So folks, if you're interested in the green room, the advisory letter, now's a great time to get on board. And of course, all the courses, other than the bundles, also that link functions at the courses. So you can get started with the bar by bar course, money management course, the swing course, the gap course, and use that code um, and start learning. And I did coaching, but if you sign up this week, and I'll send you last night's coaching session, and so you can get familiar with that. And with that being said, we'll be back in 2 weeks. If you have questions, email us, Greg and Dan at Master Trader. Enjoy.